Good morning. It's Jeffrey Christian of CPM Group. It's about 10:50 in New York today. The price of gold is around 1792 as we start recording this. I want to talk a little bit today about our outlook for gold and silver, pretty much on a shorter term basis. There's several factors that have come up over the last couple days, and I'll also talk a little bit about the relationship between interest rates and rising interest rates and gold and silver prices. First, I want to talk about, well, I'll mention that we will be issuing our January Precious Metals Advisory today, January 7th. It'll come out probably this afternoon. The front part talks about some of the anti-democratic forces and pressures that we're seeing in the United States. We didn't really talk about the similar patterns in other countries that we're seeing, but we put them into the context of the 1930s experience and discuss their likely impact on gold and silver investment demand trends and prices. And on Tuesday in the video, I talked about the fact that I had been reviewing the history of the rise of fascist forces in the United States in the 1930s during the Great Depression. It was called America First movement, and they used the title "Make America Great Again," and they kind of burnt away once World War II started. Anyway, we talk about that in the front, and then in the core of the report, which is 40 some odd pages typically, we talk about CPM Group's supply, demand, and price outlook for all 5 of the major precious metals: gold, silver, platinum, palladium, and rhodium in 2022. So that's coming out today, and it's pretty interesting, and it's topical given the way prices have behaved in the first week of January. We also will be releasing gold and silver buy recommendations for trade recommendations. These are our short-term trade recommendations for the next week or two. And I'll talk about that because, since late November, we have had a stand aside pattern comment. And if you look at this, you can see, really, well, the gold price on these charts looks like it's been moving in a sideways channel for most of the last 6 months. You did have a little spike up in October and early November, maybe, but then it came back down. And since the middle of November, gold has basically been trading in a channel, and has silver. Now, from December 15th onward, we saw gold and silver. Well, we saw gold and silver prices plunge in early December down to the low end of those channels. And then from December 15th until this week, we saw gold and silver prices moving upward toward the top of that channel. But throughout all of this, even though there was some rising bullishness because the prices were rising, throughout this entire period, the prices really stayed in those channels. And then gold and silver fell sharply yesterday and kind of flopped around today. And that was largely, I think, a reflection of the increase in interest rates. We've seen 10 years interest rates rise, and we also have seen the minutes of the FOMC meeting in December where they said, look, we really have to get inflation under control. So we've seen this, and we saw gold and silver rising. We saw investors, here's silver prices. Pretty much the same thing. We've been in this channel over the last 2 months. We moved from the bottom of the channel December 15th to the top of the channel. And then in the last 2 or 3 days, we moved back to the bottom. And CPM Group's short-term view, based on, which is reflected in our trade recommendations for gold and silver, and we explain a lot more in those documents. Our short-term view is that this channel will continue to hold, that while the prices have come off and they're testing the bottom end of these ranges, the bottom end will probably hold, and we'll see the prices move back up toward the top end of the range in the short term. So that's our view. Now, part of what was going on this week was the Fed's comments and the Fed's behavior and the rise in interest rates. And I want to talk a little bit about interest rates because it was very interesting. We saw a period on Wednesday, when interest rates were rising, the currency markets were very volatile, the stock market was rising, oil prices, which have risen very sharply, and they're testing $80 for West Texas Intermediate now, and they're about 81.20 or 81.30 for Brent. We saw assets rising in conjunction with rising interest rates, and that flies in the face of some of the simplistic paternosters that people have in the markets, that rising interest rates are bad for stocks and bad for gold and bad for silver and bad for commodities in general. And in fact, we saw initially all of those prices rising. And it's very funny because you hear people talking about the stock market being down, but the Dow Jones reached a record on Wednesday, gave it up in the afternoon, and it's off a little bit now. The NASDAQ, yeah, we've had a lot of tech stocks that ought not to be as grossly overvalued as they are, and they have come off 40% or so. But the NASDAQ overall is only off about 6% from its high. And its high was a couple of weeks ago. So you still have a pretty strong stock market. And then you have the interest rates. Now, the thing about interest rates, and we've talked about this in the past, but we'll reiterate it, is rising interest rates can have one of two effects on gold prices and silver prices. It depends not so much on the fact that interest rates are rising. One of the factors is how low are they and how high are they? What's the level that they're rising from and to that they're rising to? And the reality is that interest rates are very, very low. And even though they've risen 20 basis points, 30 basis points in the last couple of weeks, they're still very low, and they're probably going to stay very low. In addition to that, another important point is the causes behind the interest rate increase. And then the third thing, which is really important, is how does the broader financial market interpret the increase in interest rates? And it can interpret it in many ways. Right now, there's an A/B switch. The broader financial market clearly is saying interest rates are rising because the Fed has realized some of the issues with inflation, and it is taking steps to get inflation under control, and it will succeed. The alternative is that the market could say the Fed has realized that inflation is rising and it cannot control it, and we're going to see hyperinflation. The broader financial markets are not taking that view. The perma bulls in gold and silver, the diehard believers, might be talking about hyperinflation and $10,000 gold and $1,000 silver, but they always do. But the broader financial market, what we would call the educated public, the broader financial markets are saying we believe that the Fed can assert control, get inflation under control, and obviate long-term hyperinflationary consequences of the monetary largesse that they have undertaken really over the last 12, 15 years, and the fiscal irresponsibility that we've seen over the last 40 years. So the market is voting in favor of the Fed being able to successfully get inflation under control. And as a consequence, you saw the gold price and silver prices come off over the last couple of days. And that, if you remember our video from Tuesday, is pretty much what we're expecting over the course of this year. We do think that for much of 2022, if not for all of 2022, financial markets will have a relatively sanguine economic outlook. And that relatively sanguine economic outlook will be it will be manifested in gold and silver prices not falling sharply. People aren't going to say, oh, everything's hunky-dory and we don't need gold and silver in our wealth portfolio. But it's probably going to keep gold and silver prices from rising sharply out of that range that we've seen over the last 6 months, really, for the most part. That's our view today. We'll talk to you next week. Take care. Have a good weekend. Be careful and keep your mask up.